Hello, everyone. Welcome to the presentation today on calculating zakah on modern financial assets. There's a lot to learn about zakah, the obligatory charity owed by Muslims, and this presentation will provide a brief overview of who should pay zakah, what property it is owed on, and how to calculate it on certain assets. But before we begin, I need to make a somewhat unusual request, which is to ask that you don't click the like button for any reason. Unlike other industries that welcome testimonials, ours actually does not. So other than asking questions, please do not make any positive comments as they could be viewed by regulators as testimonials. I'll take a moment to introduce your presenters for today. We're joined today by Azad's President and CEO, Bashar Qasim, who is a certified Sharia auditor and advisor, one of the few in the U.S. who actually holds this distinction. And my name is Fatima Iqbal. I'm a certified financial planner at Azad, joining you from Chicago. I'll be giving the main presentation today, and Bashar will answer questions. And at the end of the presentation, you'll have a chance to ask questions by typing your question in the comments section or emailing us at info@azadfunds.com. Now let's turn to today's topic, zakah. Please note that we're presenting information based on generally accepted Islamic principles following standards published by AOFI, which is the Accounting and Auditing Organization for Islamic Financial Institutions. It's not intended to be comprehensive in all schools of thought. And this webinar is intended to provide a brief overview explaining the general principles of zakah calculation. But of course, you can always learn more by contacting Azad at 888-86 AZZAD. So first, let's understand the basics of zakah. Zakah is a financial obligation that every Muslim must pay on certain assets that are worth more than a certain amount, called the nisab, and that have been owned for a period of 12 lunar months, called the hawl. Zakah is mentioned in the Quran 81 times, and it's often mentioned alongside with salah or prayer. And while giving to charity is a financial transaction, it's an integral part of a Muslim's spiritual health, and of course specific care should be given in making sure it is handled correctly. Zakah is an opportunity to bless your wealth by giving it to those in need. Zakah is obligatory on every living Muslim regardless of gender, age, or mental status who owns a certain number of assets that have reached a minimum amount that have been held for at least 12 lunar months, and that meet the other conditions of zakah. However, if certain conditions are not met, then it does not remain compulsory. We'll discuss this next. Let's take a look at the conditions that must be met before zakah becomes obligatory. I'll just list them now and then explain them in the next few slides. The conditions are owning at least the minimum amount of wealth, or the nisab, the lapse of 1 lunar year, the complete ownership of the assets to a particular person. Of course, there should not be any other reason an asset is not zakatable, such as insolvency, and the assets must have some real or assumed growth. So first, the total amount of wealth owned by an individual must meet a minimum threshold called the nisab. And while the prophetic hadith describe the threshold, or the nisab, for different assets such as gold, silver, and livestock, the question really becomes what nisab is relevant on our modern financial assets. The nisab can be determined based on the nisab of silver or gold, and this is equal to the current market value of 85 grams of gold or 595 grams of silver. According to the Hanafi and Maliki juristic schools, the nisab is calculated at the beginning and end of the year and changes in between are overlooked. So any increase of property after reaching the nisab during the year is to be included in the total sum counted for zakah. This is considered the easiest and most applicable among the other juristic views, which has made the majority of scholars adopt it. So the value of 85 grams of gold as of May 22, 2017 was about $3,588. So any Muslim who owns zakatable assets worth $3,588 or more, and who has held those assets for at least 12 lunar months, should pay zakah on those assets. We'll go over which assets are zakatable in a moment. So what happens when wealth reaches the minimum amount, or nisab? The next condition is that these assets should be held for a full lunar year, starting from the day it reaches the nisab. The Arabic word hawl refers to this holding period of one lunar year after which zakah becomes due. Zakatul mal is not due on a particular day for everyone, but it should be paid once per lunar year. Many Muslims choose to pay their zakah during Ramadan, both for the additional blessings of giving during this month and because it's easy to remember from year to year. Each individual can set their own hawl date based on when they have held their zakatable assets for a minimum of one lunar year. For people who choose to set a hawl date based on the solar calendar, the percentage for zakah is raised up to 2.577% instead of 2.5%, because the solar calendar is a bit longer than the lunar calendar. The third condition that must be met is that the assets must be completely owned by a particular person or family. So assets owned by an organization or government are not zakatable. Zakah is liable on the assets that are completely owned and vested for the owners. Complete ownership requires that assets be accessible and disposable by the owners without the interference of others. If you completely own an asset but would have to pay taxes or penalties if you sold it, this does not nullify the fact that you own it. So, for example, an individual who has an IRA can access the money in the account even though they would have to pay a penalty and taxes if they sold it before reaching the retirement age. This fact does not prevent the IRA from being zakatable, but zakah would only be calculated on the amount that would be left after applicable taxes and penalties. On the other hand, an employee cannot withdraw from a 401k or 403b account at their current job if they're below the distribution age. This 401k or 403b is not zakatable until the employee either leaves that job or they reach the age when they're allowed to withdraw from the account. A person must be solvent also in order for zakah to be due from them. If a person has debt that is immediately due, that is greater than what they own, they're not liable for zakah. Assets on which zakah is owed include gold and silver, cash equivalents, assets intended for trade or sale, good current debt, livestock, crops, and minerals. All cash, gold, and silver are liable for zakah at 2.5% based on their values on the day of the hawl. There are certain assets on which zakah is not owed. Assets that are considered to be capital goods, such as tools or factories, are not zakatable themselves. However, the income that is derived from them is zakatable if it meets the conditions discussed earlier. Property for personal use is also not zakatable, so this includes one's personal residence, vehicles, clothes, and other personal belongings. Only halal and lawful assets are liable for zakah. So no zakah is required on haram or unlawful assets such as liquor, pork, gambling, interest, stolen money, bribe money, or any other impure money. Such assets or money must be returned to their lawful owners or donated to charity as purification. Purification is not a form of zakah or sadaqah, and it's only intended to rid oneself from impure money that one never intended to benefit from. In modern financial times, this includes securities or stocks that are deemed not to be halal according to Sharia investment guidelines, including financial options and derivatives. Azad Asset Management uses halal investment guidelines established by AYOFI and adopted by the Azad Sharia Advisory Board. Finally, assets intended for retaining ownership and for the purpose of deriving income are not zakatable. This means that zakah is not owed on the current market value of investment property and income-oriented stocks. Instead, income derived from them is zakatable, as is the case with capital goods. So, for example, zakah is not paid on the market value of a rental property. However, income that is derived as rent and that is held for the hawl period is zakatable. In calculating zakah, we start with the zakah base, which equals all zakatable assets, minus liabilities or debts that are payable by the hawl date. Zakah is not obligatory on wages, salaries, and income at the time of receiving such income. Zakah is assessed based on conditions we discussed earlier, and it must meet the ownership and haul period requirements. So let's take a look at how debt relates to zakah. If you make a loan, you owe zakah on any amount repaid as of the haul date if it's in good standing. If the loan is past due and in bad standing, no zakah is owed until the owner recovers the debt and the zakah is paid once for all past years it was in bad standing. If you've taken a loan and owe debt, the amount due before the haul date is deductible from one zakah base. However, debt payments that are due after the haul date are not deductible from the zakah base. So for example, a person may deduct their current home mortgage payment from their zakah base, but not the entire loan amount. The interest portion of any debt acquired in a non-halal way should not be deducted from the zakah base. However, one may deduct debt that is a result of acquiring commercial assets from one's zakah base. This relates to modern financial assets since bonds are also a form of debt. However, interest-based debt securities, including bonds, banking notes, CDs, commercial paper, money markets, and others that are liquid are liable for zakah only on the principal amount or market value, whichever is lower. Any gain due to interest accrued or market appreciation is not recognized as lawful and is not eligible for zakah. These gains should be considered unlawful and purified by donating to charity. Now, before we discuss how to calculate zakah on growth stocks and income stocks, let's briefly recap the kinds of accounts that can hold stocks first. For these accounts, we should refer to the conditions of zakah to see whether the owner has complete ownership. Owners have full ownership in accounts like IRAs and education savings accounts, but may have to pay taxes or a penalty when withdrawing. For accounts with full ownership, zakah is owed on the amount owned after taxes and penalties. However, for accounts that do not have full ownership, like current 401k accounts, there is no zakah due since ownership is not complete. We've gone through who is liable for zakah and what assets and account types are zakatable. So let's talk now about the calculation of zakah on stocks. We'll use common stocks as an example since we get a lot of questions about them. Of course, our clients at Azad know that we calculate zakah for them on an annual basis and send a statement showing the total amount to be purified and paid from their portfolios. This calculation can be used for shares of publicly traded companies that you may acquire. For the purpose of the explanation, we'll assume that the stocks follow halal Islamic guidelines, since zakah is not owed on shares of stocks that are not halal. There are two basic intentions for purchasing a stock, either for the growth and appreciation of the stock or for the income or dividends it can provide. With this distinction, let's take a look at how we can calculate zakah on a portfolio of stocks. While a shareholder may reap the benefits of both growth and income from a particular holding, the original intention of why it was purchased is the key. So unlike taxes, we don't have the IRS looking over our shoulder. However, since zakah is a matter between yourself and God, your intention regarding your investment determines which calculation to use. The zakah of a portfolio of stocks will be calculated by adding the zakah owed on income stocks and the zakah owed on growth stocks. So you may be wondering, why differentiate between growth and income stocks? Stocks held for the purpose of growth and appreciation are like assets that are held for the purpose of trading and are considered commercial goods, or in Arabic, arud tijara. For these shares, their zakah base will be based on the total closing market value of shares owned or net asset value on the haul date. The net asset value is then multiplied by 2.5%. To give you an idea of how this calculation is done, let's take an example of an IRA account investing in a growth stock that has a market value of $50,000 on the haul date. So to calculate the zakah, we must account for 10% penalties if the person is under age 59.5 and also their tax bracket. So assuming this person is under age 59.5 and in the 15% tax bracket, we calculate the zakah by multiplying 50,000 times 1 minus the penalty rate, or 10%, times 1 minus the tax rate, or in this case 15%, by 2.5%. This gives us the zakah due on the amount they would have in hand if they were to withdraw from their IRA account. Stocks held for the purpose of deriving an income or for the benefit from dividends are considered to be capital goods. The zakah is not paid on the market value of the shares owned, but on the zakatable assets in the balance sheet allocated to the shares owned. However, it's typically difficult to track this unless you have the data available. Therefore, the zakah base of each share of such a company can be estimated by taking the company's current assets and subtracting the current liabilities and the long-term liabilities used to finance those zakatable assets. This is then divided by the total number of outstanding shares, and the zakah base will be any amount in excess of 0. Of course, more accurate estimation methods should be used if the data is available and allows. So there you have a brief overview of how to calculate zakah on growth and income stocks, two investments commonly held by the American Muslim investor. So in the next few slides, we're going to have a quick pop quiz. This is not intended to stress you out or to trip you up, but we found that going over practical situations like this can help people understand these concepts more easily than when we just talk about it. So feel free to try to figure out the answer either on your own or in the comments. And at the end of each question, we'll show you the correct answer and explain it. So for this section, I'm going to bring in Azad's president and CEO, Bashar Qasim, to explain the answers. Bashar is a certified Sharia advisor and auditor, which is an accreditation awarded by AOFI, the global standard setting for halal investing. So our first question. Abdullah is a 45-year-old engineer who has a 401k plan with his employer, Kenwood Corporation. The market value of the plan on his zakah haul date is $100,000. His 401k contains stocks for capital appreciation only, and Abdullah's tax rate is 30%. He is not in debt and is fully vested in the 401k plan. So how much does Abdullah owe for zakah on his 401k? Bashar, could you get us started on how to solve this question?
Thank you, Fatima. First of all, we want to check the most critical criteria upon which the assets would be considered to be zakatable, which is the ownership. And this is really a very common factor, and people usually get confused when they try to determine whether the assets are zakatable or not. So the ownership here, we're looking for complete ownership. So since Abdullah is 45 years old, most likely the 401k plan will not allow him to withdraw these assets unless Abdullah terminate his employment. Because of this situation, Abdullah is deemed not to have full control and ownership of these assets. He cannot dispose the assets of the 401k plan, again, because of the laws and the rules of the plan itself. So since this situation, there is actually no zakah on the 401k plan, on the assets of the 401k, because, again, Abdullah cannot withdraw the assets. So the answer D is the correct answer.
So our next question, Khadija is a real estate flipper who buys and sells houses. She bought a house in Miami for $450,000. While she is seeking a good sale price for the house, she received a year's rent on the house totaling $30,000. The market price of the house is $50,000. Khadija is not in debt, and she kept all the rent money for a year. How much zakah is she liable after 1 year? So Bashar, is she liable for the zakah on the house, on the income, on both? Can you walk us through this?
Sure. So again, obviously, Khadija is a trader. She buys and sells houses. and of course she completely own these houses since she is buying and selling them. Now we want to see like what kind of assets is this? Like, is this money or money alike or a debt or commercial goods? It's obviously they are commercial goods, but the question here, how do you pay the zakah on commercial goods? And the rule is we go by the market value of the house at the date of the howl. And since Khadija also received $30,000 rental income and kept it until the date of the howl, so actually the zakah will be 2.5% of the 450 plus the 30,000, which is the market price. I'm sorry, we go with the market price. So it is like 500,000 because that's the market price at the date of the howl, not the cost price. And also the same thing. If the price is lower than the cost, you go by the market price. So the zakah will be 2.5% of the 500,000 plus the 30,000. So it is 2.5%, which is the correct answer is answer A, 2.5% of the $530,000.
Bashar, if I can ask a follow-up question. What if Khadija's intention was not to buy and sell the houses? What if her intention was just to buy the house and keep it as rental property? Would that change the answer?
Yeah, of course. Very good question, Fatima. If Khadija, her intention is to own the property either for the purpose of living in it or for the purpose of renting it, not to really trade it, not to benefit from the price appreciation of the house, then Khadija is not deemed to be trader, and the house is not commercial goods. They're not urud tijara. So there will be no zakah on the house at all. However, the rental income, if she is renting that house, the rental income that lasted until the date of the howl, whatever left of that rental income, that would be zakatable.
Right. Next question. Ahmed was given a BMW car as a bonus from his employer, Microsoft. Ahmed intends to sell the car when he received it. It took him 14 months, however, to sell the car. So how much zakat does Ahmed owe on the car? So, Bashar, if in this situation, does it matter that this was a bonus, or it took him 14 months, he's had it more than a lunar calendar year? How would we answer this question?
Very good question, Fatima. It is very important to know how the assets were acquired in order to deem these assets urud tijara or not. So absolutely clear here that Ahmed did not acquire the BMW through trading or for the purpose of buying and selling, although he got it through his employer as a bonus, so that's a gift. That will not deem it to be a commercial goods. It's kind of like, personal property. Although Ahmed intend to sell it later on, that would not change the fact that these are not commercial goods. So actually there will be no zakah on the BMW car. So the right answer is C.
Our next question. Yusuf is a key employee at Cisco and was given options to buy 10,000 shares of Cisco at $10 per share. A month before the howl, the price of Cisco reached $30. Yusuf then exercised his options and purchased 10,000 shares of Cisco. How much zakah does he owe on these shares?
Very good. First of all, Yusuf owns the option. So what exactly he's owning? Does he own the shares of Cisco? No, he owns the option to purchase the shares of Cisco. And so there is no assets considered to be an assets that are deemed to be zakatable assets, because the options are not deemed to be an assets that they can be owned or traded at this time, because he has not purchased them. He has the option itself, So in this case, the option would not be considered as zakatable assets, and there would be zero zakah on the on the options. Now, I would say that once Yusuf purchased these shares, and his intention was for the purpose of trading them, you're right, that would be considered as commercial goods, and they can be zakatable. So it now depends on the purpose. After he purchased these assets, what is the purpose for purchasing the assets? But the option itself, no matter how many options the person can control, these are not assets that are fully owned, and then they are not zakatable.
Right. Next question. Aziz is a 50-year-old business owner who has an IRA, a SEP IRA account with Merrill Lynch. He's in the 30% tax bracket and would pay a 10% penalty if he took money out of his SEP IRA. His advisor at Merrill Lynch invested the assets in Aziz's accounts in 5,000 shares of Wells Fargo Bank, which does not pass the halal screens, and 1,000 shares of Tesla Motors, which does pass the screens. On the halal date, the market price for Wells Fargo was $50 per share and Tesla was $220 per share. Aziz's investing objective is to benefit from the growth so he can sell the stocks later at a higher price. How much zakah will he owe on this account? So Bashar, will he owe zakah on all of it? Some of it? It's an IRA. It's not a 401k. And what is the difference also between paying on a halal stock versus one that does not pass the halal screen?
Correct. That's a good question. If you look at the assets that Aziz owned, you'll find Wells Fargo Bank. That is a bank that involved in lending, borrowing, and interest. So these are not halal assets, so there are no zakah on these assets. What Aziz needs to do is to liquidate and get rid of these assets. However, the Tesla, it's a company in manufacturing electrical car, and that's a lawful and halal business activity. So the shares of Tesla would be liable for zakah. Now, we look at the date of the haul. What is at the date of the haul? Tesla is trading, and it is trading at $220 a share. So multiply this by 1,000, so that's $220,000 the zakah on Tesla. However, the sub IRA, since Aziz is less than 59.5, he would be assessed a 10% penalty if he is to withdraw the shares or liquidate the shares and withdraw them from the account. So we need to take into consideration the zakatable assets. So the $220,000 should be reduced by 40%, and then you pay the 2.5% on the net. So the answer for that will be, if you have a calculator, so what we'll do here, to 20,000.
Bashar, I'll save you the time, is 3,000.
Yeah, okay, so that's C, number C. That's $3,300, which is the zakah of the 220,000 reduced by the 40%, 10% for the penalty and 30% for the taxes.
And the 2.5%. All right. So next question. Hassan has just found out that his advisor at Morgan Stanley had invested his account in bonds, which earn money only from interest. He bought the bonds for $10,000, and they're now worth $11,000. The bonds have coupon payments of 5% per year and mature after 10 years. The total amount he has earned so far is $2,000. So how much zakah would he owe on these bonds?
Very good. The bond is a contract that involves in lending, borrowing, and interest, because and also it is a form of debt that is tradable on the market. So part of the assets, they're not halal. The interest component plus any increase in the debt should not be considered as part of the zakatable assets. So we go and we look at the market value of these bonds or the cost, whichever is less. So in this case, the market value is about $11,000, and so it is above the cost of these bonds. So Hassan will be liable only for the zakah on the $10,000. So that will be 2.5% of the $10,000, and that is $250. So answer A is the right answer. What Hassan needs to do with the money in excess of that, first of all, he should really get rid of these bonds and replace them with a halal assets like sukuk now. They are the Islamic alternative of these bonds. And any interest earned, he should really cleanse it, get rid of it, and pledge to himself not to go back again and own those type of assets.
All right, thank you, Bashar. So now we're going to open up the conversation to any questions from our viewers. Those that are joining us through Facebook can simply type your questions in the comment section. And during this broadcast, you can also email us questions at info@azadfunds.com. So let's see if we have any questions coming in. So first question we have, can you elaborate on the different zakah obligation for an IRA or 401k? And what about a profit-sharing plan?
Very good. This is, again, a question, as I mentioned, the question of ownership is the dominant question upon which the assets would be deemed to be zakatable or not. So if the ownership is complete, and as the scholars define the ownership is a relationship between a person and a property, where the person has the right to dispose this property without the interference of others, access and dispose this property. So in this case, if you look at the 401k, it's really different than the IRA. The IRA is the individual retirement account. It is an individual retirement account where the person controls these assets. He can decide how to invest it. He can withdraw this money, although he will be liable for taxes and penalties if he is if he's below the age of 59 and a half. There are certain circumstances that this penalty may be waived. So these assets in the IRA are fully owned and controlled. However, you reduce the zakatable base by any taxes or penalty that you would have incurred if you were to withdraw the assets or liquidate the assets. In the 401k, it's different. In the 401k, it's an employer-sponsored retirement plan, and it's controlled by a document, by rules. Most of the 401k will not allow the person, if he is below age 60, for example, to withdraw these assets. So in this case, the person is not deemed to have full ownership on these assets and cannot access them, although sometimes the 401k may allow him to borrow, but that's different than complete access and disposal of the assets. So in this case, in the 401k, or of course the defined benefit plan, which is similar to 401k, it's a qualified plan sponsored by the business, you will not be able to withdraw these assets. However, if the person, for example, he is above certain age, most companies 60, and they enable you to withdraw these assets, although the person may not decide to withdraw it, but just the fact that he can withdraw these assets deemed to be fully owned and controlled by the person, and they become zakatable. So the issue here is ownership and control rather than IRA or 401k.
The one thing I would also add maybe is if you're unsure about whether you can withdraw assets from your 401k, you can request the summary plan description from your HR department or employer to really read what are the qualifications and requirements before you can withdraw money. That way you can see whether you have the ability to withdraw or not. And as Bashar mentioned, if you cannot withdraw from the 401k until you terminate employment or until a later age, but at least now while you are still working, you cannot withdraw, then those assets would not be zakatable. Another question that we have, do you pay zakah on a private investment, such as non-public shares of a company, if the value is unclear? So if you're not sure what the market value of your shares might be in a private investment, would you pay zakah on it, and how?
You're right. Again, we look at the purpose of owning. I know it's investment, but investment is it's a broad term. Are you planning to buy them with the intention to benefit from the price appreciation? If it's not the case, then we go for looking at any zakatable assets within the company itself. And if you can check the balance sheet of the company and see what zakatable assets there, how much cash or cash equivalent or inventory in case of the company in the business of commodities or trading properties. So you need to look through the company. So that's how the zakah would be assessed on privately held company. The other thing that maybe if these companies, there is also an option that the company may pay the zakah by itself if it's owned by Muslims. So if the company pay the zakah, because companies as a legal entity, as a person, still could exercise and pay the zakah on behalf of the shareholders. So if this happens, then that's it. You won't pay any more zakah from your pocket, because there is a well-known hadith that the Prophet, peace be upon him, said, "La thaniya fi sadaqah." There is no double payment on the zakah. So in this case, this is how you deal paying zakah on privately held companies.
So we have another question relating to debt and how much debt should be deducted as a liability. So let's take, for example, somebody who has purchased a home, however, they have an outstanding debt or mortgage. How would they deduct that amount from their zakah base?
You can deduct the debt that is due by the date of the howl, just to be on the conservative side. You can deduct that. Like, let's say you have a credit card payment that is due right away, or you have a tax bill. As you know, these are all debt that are due immediately. Those you can deduct them from your zakatable base. Now, there are other debt. The debt that is deferred debt, that is not due, you cannot deduct that debt unless this debt is actually used to finance or used to purchase a zakatable assets, like somebody who is, for example, in the business of flipping homes, and he's using murabaha or debt to purchase and finance the purchases. So in this case, yes, that can be deducted from the zakatable base. But of course, when you look at your home that you live in, the home itself is not zakatable, so you cannot really deduct that the mortgage that is the debt on the house from the zakatable base.
So just to clarify, if you have, let's say, for example, $100,000 outstanding debt on your home, and let's say your howl date is going to be, the 23rd of Shaban, and let's say by the 23rd of Shaban you owe a $1,000 payment on your mortgage. Just to clarify, the $1,000 will be the amount that you deduct, correct? Not the full
Correct.
$100,000.
Exactly. Not the full $100,000.
Okay. Next question is on jewelry. Do I have to pay zakah on jewelry? And I guess specifically we can ask also maybe about gold jewelry or silver jewelry.
You're right. Now, gold, most of the madahib, except the Hanafi school, they don't assess zakah on jewelry or gold. Gold, as you know, gold and silver are zakatable, but being used as an ornament or as a jewelry, they're not zakatable in all the madahib except in the Hanafi school. So the jewelry, but the jewelry other than gold and silver, they're not considered to be as zakatable assets unless they are used as a commercial goods. If somebody in the business of trading and buying, selling jewelry, then that's be zakatable, not because they are jewelry, but because they are commercial goods.
Okay, so if there's, like, for example, gemstones or other types of jewelry, then of course that would not be included.
Correct.
Another question is about change in portfolio value. So let's say if in year one you have a portfolio that's worth $100,000, and then in year two your portfolio has some losses and it goes down to only $75,000. Do you adjust for the loss, or do you just pay zakah on $75,000?
You're right, Fatima. The zakah, it's a balance sheet item. It's not an income or a profit and loss item. You pay it based on assets. So whatever the value of these assets, they can go up and down. So you look at the date of the haul and you assess how much the market value, and then you pay the zakah. So next year the price goes down, then you pay on the zakah on the current price of that year. And even if the price change after the haul, you are obligated to pay the zakah of that price, regardless the price goes up and down, because zakah is due immediately.
Okay. So basically it's a snapshot on the day of your haul, whatever the value is worth on that day. You don't take a look back throughout the year to see what happened.
Correct. If these assets are commercial goods, but again, if the assets are not commercial goods, like what we call urud mustaghallat, income producing assets, again you assess the zakah on the value of the zakatable assets that exist in the balance sheet of the company at the date of the haul.
Okay. Thank you, Bashar. As we conclude today's presentation, I'd like to invite you to visit our website, azadfunds.com, where you can learn more about our products and services. And while there, you can also sign up to receive our monthly email newsletter for ongoing information. Of course, you can also find us on Twitter and Facebook, and you can find videos on a variety of topics also on our YouTube channel, youtube.com/azadfunds. Thank you again for your time, and we hope that this information was valuable for you. Take care.
Thank you.